Good morning, good afternoon, and good evening. And it's today is Thursday, April 27, 6:18 p.m. Welcome to the latest episode of Mark Yu and Wawi Show. This is Mark Yu,
Wawi Santos.
and
Hello,
today,
everyone.
hello, and today we're gonna tackle the latest earnings report from our favorite big tech companies. So
Nice.
that's the reason our episode's title is Big Tech Bull. But we'll see how it goes with our weekly sentiments as well. So before we dive into the Google, Facebook or Meta platforms and Microsoft and Amazon, well, by the way, Amazon just came out with their earnings in just a few hours ago. So we're gonna take a look at market's reaction as well. So first, we're gonna look at the sentiments for the American Association of Individual Investors. We are seeing a lot less bulls, interestingly, for this week. From 27% last week, we're at 24, and we are still hovering at the historical lows average. So usually we're at 37.5, but currently we're at 24. For bearish investors, there are a lot more bearish investors for this week, jumping from 35 to 38, which is interesting since the market actually has bounced back up since Facebook came out with their earnings, right, Wawi?
Yeah, we had a good day today. All the
Definitely.
market indices are up
Mm-hmm.
here in the US.
Yeah, a lot of those investors who have become more bearish probably has gotten more defensive in terms of their portfolio and obviously would have missed out with today and yesterday's run. So fear and greed index, we are still at greed territory. We are actually at 59, a little less than a week ago where we were at 63, but nonetheless, we're still in greed territory. For the 125-day moving average, which indicates the market momentum of the S&P 500, taking consideration of what just happened for today and yesterday, we're actually above still, and we have been above the 125-day moving average since March 14th. So, like what we have been observing so far since the start of the year, in contrast with last year, the S&P 500 has remained, if not most of the time, above the 125-day moving average. Whereas last year, week by week, we have been trending lower and lower. But now we have been hovering at least above 125 days. Nothing outstanding though, because it looks like if we're going to take a look at the chart, it's been trending between a channel between the range of 3,800 to 4,200 for the S&P 500. So no blowouts, but still on the positive side of things. So not a bad sign for those who are optimistic with the market. For the volatility, today we have seen a major drop, 9.6.
Down again.
Yeah, for the volatility. And for the past week, it's flat,
Whew.
0.87, negative 0.87. If we're going to take a look at the volatility in the NASDAQ, which is VXN, today it's down nearly 8%, and it's down nearly 4% for the past 5 days. So not much panic ongoing in the markets now that the big tech is reporting their first quarter earnings, which is interesting. For today, no losers. Everybody is a winner, with the worst performing sector as energy and healthcare, but still on the positive side of things. For the past 5 days, we're seeing communication services positive 2.4%, followed by consumer defensive and real estate. Interestingly, technology barely make it positive, like 0.04, while the rest are in the red. The worst performing sectors are so far in the past 5 days is basic materials and energy. Yep. Year to date, technology is still one of the best performing sectors. Nonetheless, it's also the reason why communication services is the best performing sector because of the Google and Facebook. So before we look at the juicy results from Facebook's or Meta platform stock performance, we're gonna start including this chart in our weekly review. So this is the Federal Reserve Bank of New York. This is their leading indicator in looking at possibility or probability of a recession in the US 12 months ahead. So this is defined by the spread between the 10-year treasury and 3-month treasury yield. So more likely this is what Jerome Powell also looks at. So treasury term spread. So if you're gonna take a look at this chart, if you guys are listening to us on YouTube or watching, you'll be able to see this chart in your screen right now. Going back to as early as 1959. So whenever this trend touches zero or goes negative, usually we see a recession in the coming months ahead.
Mhm.
So it happened obviously multiple times. 1, 2, 3, 4, 5, 6, 7, 8, including the one in 2020. Believe it or not, we went negative in August 2019 before we shut down and economically globally and experienced a brief recession. But right now we are trending at the lowest, negative 1.13 as of March, not seen since 1981. So it's quite a worrisome figure right now that we are at. So this may also be the reason why a lot of experts are thinking that we're gonna be in a recession. So the probability chart of the Federal Reserve also indicates more than 50%, 57.77% chance of recession by March 2024. So that's 12 months down the road. So this is not seen since 1980s. So looks like we would be having an interesting year ahead. Not right now, but year after, March 2024. So that's one thing to keep in mind. So now we're gonna minimize our stuff. Oh, here we go. So for the FactSet just came out with a report saying that the S&P 500 reporting a lower net profit margin for 7th straight quarter. So far, the blended results for the first quarter of this year is averaging around 11.2%, whereas the 5-year average net profit margin is 11.4. So I'm not quite alarmed if it's just 0.2% difference, right, Wawi, compared to the 5-year average?
Mhm. Yeah.
It's
It's
not-
not a significant difference.
Yeah, exactly. But nonetheless, if you're gonna take a look at the FactSet's chart right here, there's definitely a downtrend since second quarter of 2021. We are very much profitable back then, 13%, and now we're projected to be at 11.2%, the lowest in the past since second quarter of 2021 or about 2 years ago. In terms of profitability, this quarter, we are seeing a few industries or sectors that have beat last year in terms of growing their profitability. So these sectors are consumer discretionary, industrials, and energy. Only those three, energy, industrials, and consumer discretionary, are the ones who beat their profitability compared to last year so far with all the earnings that had just came out. And in terms of the 5-year averages, the ones who have beat the 5-year averages, more profitable than their previous 5-year average, are, believe it or not, real estate, financials, utilities, energy by a big margin,
Mhm.
and industrials. So something to take note of for sure. Those are the stalwarts, good performing energy so far this year, or sectors. So I'm quite confusing there. But energy definitely is beating expectations in terms of profitability and growing their profits. So next, we're looking at the latest consumer confidence survey. So we're gonna track this as well. U.S. consumer confidence provided by Conference Board. So they just came out a couple of days ago, Tuesday, April 25th. So consumer confidence fell in April to 101.3 from 104 back in March. So it says, according to the senior director, while consumers' relatively favorable assessment of current business environment improved somewhat in April, their expectations fell and remain below the level, which often signals a recession looming in the short term. Consumers became more pessimistic about the outlook for both business conditions and labor markets. Fewer households compared to last month expect business conditions to improve, and more expect worsening of conditions in the next 6 months. So a lot less pessimistic consumers out there.
Mhm. Well, it's the millennials that are mostly affected by the inflation.
Oh,
Uh,
right.
you know,
And look at this, Huawei. April's decline reflects particular deterioration for consumers under the age of 55 years of age and
mhm,
households earning 50,000 and over. Yep, probably the millennials.
mhm.
And looking at the graph here, definitely a lot less than where we were back in 2022. Little above during the pandemic times. Definitely a lot less when we were pre-pandemic between 2017 and 2019. So consumer confidence has taken a deep dive. We haven't recovered to pre-pandemic levels as of this time. All right, now we're gonna deep dive into the reports.
Earnings report.
Earnings report. So basically, there's a website called Seeking Alpha. So for those who want to take a deep dive, this is the best website in my opinion, besides the corporate websites, like their own investor relations website, each company's. So for Google, it's a giant. It's valued at $1.32 trillion. It's priced at $107 a share, up 3% today. So since the start of the year, it's actually up 20.7%, which is outstanding.
That is
Uh,
very good.
Definitely beating the S&P 500's 8%. And let's take a look at the Nasdaq. Nasdaq since the start of the year is up 16.9%. So definitely better than a couple of the leading indices. So for Google, they reported their earnings on April 25th. They actually beat earnings expectation and they also beat revenue estimates. So that's really well delivered, well played. So just a few numbers that we're going to take a look at. Their revenue for the first quarter, it jumped 20, no, okay, it jumped 3% for the first quarter. And their profitability went down from 16.4 billion to 15 billion. So even though that their profitability dropped, they still beat the Wall Street estimate. I think they already lowered down the expectations well enough. So they jumped the lower hurdle at this point in time. Their Google search grew. YouTube ads also, well, YouTube ads actually dropped by close to 200 million. And let's look at Google Cloud. Google Cloud jumped from 5.8 to 7.45 billion.
That's a big jump.
Yeah, they earn a lot of business in Google Clouds. So let's just take a note of that, and as we are going to tackle Microsoft Cloud and Amazon Cloud as well in a little bit. Total TAC, which is their acquisition costs. Usually we see this growing every year. So on the first quarter, not so much, which is a good sign. From 11.99 billion, almost 12 billion to 11.7 billion. So which is good. If we're going to take a look at their cash, Cash is around 115 billion from 113.7 billion last year, or as of December, which is really good.
Amazing.
Yep. Their debt is still well controlled, well managed at 13.7 billion. A lot of cash in this company. Yep. So that does it for Google. And Google, in terms of its share price, since it came out yesterday, it's up about 3%, 3.49%. Not bad. And it's up 1.97% for the past 5 days. So that's for Google. And if we're going to take a look at next, Microsoft or Facebook, I guess. So Facebook is outstanding. It registered 14% increase today as they came out with their earnings last evening. So Facebook or Meta Platforms, it's a 537 billion company. If I'm not mistaken, Huawei at one point they were close to $1 trillion, right? They were neck and neck with Google at one point before they all collapsed last year, erasing millions of billions of dollars in valuation. So Meta Platforms came out with their report. They actually beat their earnings estimates and they also beat their revenue estimates, or beat on both. And if we're going to take a look at their report, just a quick review of their numbers. So revenue, like Google, they also increased 3% to 28.6 billion from 27.9. So for Google, I guess Google generates a lot more revenue, right, Huawei? 40 billion. So for Facebook, it's 28.6 billion. So Google seems to be the bigger brother. Explains their market cap as well, $1.32 trillion in valuation. Their profit also dropped 24% from 7.46 billion to 5.7 billion. So like Google, it also dropped. I didn't calculate for Google how much it dropped. So let's take a look at Google's number. So from 15 negative, well, 15 minus 16.4. That's negative 1.4 divided by 15. 9% drop. So not bad of a drop in terms of profitability, but still, you know, both companies are minting cash. Daily active people, family daily active people, 3 billion.
That's incredible.
3 billion people daily for the first quarter as
It's
an
a
average.
big giant. It's a
Yeah,
global giant.
a lot of people are still using Facebook. I guess that includes Instagram, right, Huawei?
Yeah, it includes Instagram.
Instagram headcount, they've been trimming a lot of employees. Nonetheless, it's still decreased 1%. So I think one of the reasons why they lost a lot of money is because of the costs, personal costs. They said approximately $1 billion related to tax severance and personal costs.
But
So,
boy, oh boy, the way it rallied today, they
mhm.
were just waiting for the earnings report.
Yeah, eager bulls to get in. But for sure, those who have bet otherwise have been screwed, because if they shorted the Meta Platform stock, oh my gosh, that would have been terrible. So for the cash standing, Facebook actually dipped in terms of their cash from 14.6 down to 11.5. So 11.5 plus 25.88. So they have 37.4 billion. 37.4 billion compared to 40 billion last year. So a big dip in their cash cushion. Long-term debt is still hovering around $10 billion. So not in any form or shape in trouble in terms of their financing. So Facebook still remains in steady ground, looks like. And their, what did they call it this year? Year of efficiency.
Mhm.
looks like there's still some work to do because their profitability quite took a huge hit. And so on to the next. We're looking at Microsoft. So
Yeah, another cloud provider.
yes, sir. Another I think they call their cloud services as Azure, right? Azure.
Azure Cloud
Azure.
Services.
Wow, they're even bigger than Google. I'm surprised. $2.2 trillion. Microsoft.
Mm-hmm.
Um,
Crazy.
so they're currently at $304 a share. So let's take a look at their earnings report. Microsoft beats earnings and revenue as well. So pretty good, not bad. So far on the three companies that we have discussed, all of them have beat both earnings and revenue estimates. So they came out with a report yesterday. Their revenue is up 7% and their profit increased by 9%, 14% in constant currency, ignoring US dollar up and down movement. So this is
Wow.
quite outstanding. This is a strong company right here, Wally. Because
Mm-hmm.
come to think of it, Google is an international conglomerate as well as Facebook with 3 billion users, but Microsoft comes out solid in terms of their performance, which is really impressive. Generating 14% in constant currency. So their revenue, they still grew despite the recessionary talk, despite banks collapsing left and right in March. As
Yeah,
of
and despite not getting the Activision Blizzard
oh yeah,
acquisition.
that's one more thing. There's more cash in their coffers.
Oh no.
There's more cash in their coffers.
Yes.
69 billion dollar, which UK has sued to block the deal.
Mm-hmm.
So from 49 billion, they grew nearly $4 billion just
They're
in
cash heavy right now. So
hmm And their profit from 16.7 jumped to 18.3, which is really impressive. During hard times, Microsoft still finds a way to generate cash or profitability. Their cash, meanwhile, has remained steady at $104 billion compared to last year's 104.7 billion.
I'm
Whoa.
feeling bad right now because
Mhm.
I sold Microsoft.
You did? Oh,
Yeah,
well,
I didn't hold, but I might get into it again.
they're past $300 a share now for sure.
Yeah, it's too
Whereas,
high right now.
yeah, whereas previously it was as low as 239 at the start of the year. They're up
Mm-hmm.
27%. Oh, we forgot to take a look at Facebook. Facebook is up 14% outstandingly this today. But
Mm-hmm.
since the start of the year, it almost doubled from $124 a share. They're at $238,
Woo!
91%.
Congratulations to those that held on
Amazing.
to Meta platforms.
Yes, sir. Well, it's been a rough year last year. It's so hard to keep it in the portfolio. I actually
Mm-hmm.
sold a little bit, but still held quite a few in the portfolio. So for
Mm-hmm.
Facebook, it's up 20.7% since the start of the year. So these big tech companies, especially Facebook, just skyrocketed. I'm pretty sure one of the reasons Nasdaq is up this year is because of Facebook.
Mm-hmm. As
Microsoft,
well as S&P 500 being up to date too because
yeah,
of these big companies.
yep, pretty outstanding. Oh yeah, we haven't taken a look at their Azure business, right? Let's see their cloud
Mm-hmm.
services. Intelligent cloud segment revenue, constant currency. So we're looking at 16% jump in intelligent
Wow.
clouds, or 22 minus 18.98. $3 billion in gain in cloud services operation. So that compares to Google's 2 billion, right?
Mm-hmm.
Let's see. Google's cloud gains 7.45 minus 5.8. 1.35 billion. So looks like Microsoft is still churning out a good amount of business, growing their cloud business more than Google. So now we're gonna take a look at Amazon. So they just came out. Wow, interestingly, they're down 2.34% as of 7:30. Let's take a look.
Yeah, after it took a dive after market.
Yeah, so it actually went up 11% right away after earnings, and then investors started digesting, and then it's down
Yeah, so
1.9%. So quite a turnaround for Amazon.
they're seeing a cloud on the horizon for Amazon, and
Mhm.
on my drive here, I was about to read it, but I didn't get to it.
Well, we're gonna take a look at um Amazon's cloud right now. So Amazon currently valued at $1 trillion, 1.08 trillion, $109 a share. So they actually beat their earnings and they beat their revenue. So like Microsoft, Facebook, Google, all of them beat their expectations. So their sales actually increased by 9% to $127 billion. AWS, this is the cloud business, they actually increased 16% to 21.4 billion. So actually Microsoft generates bigger cloud services compared to Amazon at this point in time at 22 billion. But let's see what's going on.
Well, they said the cloud business went down.
Mhm.
You know that Amazon CFO said AWS growth for the second quarter so far has
Oh,
been down
okay. So they're saying this
even more
quarter.
than the first, even
Uh-oh.
more than the first quarter.
So she's already forecasting what's coming in the coming months.
Mm-hmm. Yep.
Okay, so we're just looking at hindsight. This is the first quarter of this year. So increase 16%. So that kind of dampened things down, I guess. So that
So
kind of
I don't know, you know, why they're forecasting that the second quarter cloud earnings will be down. I don't know what's going on.
Mhm. Well, their cash as of the recent quarter, March 31st, quite took a dip from 54.2 billion last year. It's down to 36.4 billion. Still a lot of cash. We're gonna take a look at its revenue actually increased 127 like we said earlier. Profitability wise, see, it even turned a profit from 3.8 billion loss last year first quarter. It generated 3.17 billion in profits. So I guess that's what inspired the rally right away. What tempered the excitement was the CFO's comments in terms
Mhm.
of their forecast. So I think we're gonna be in for a ride tomorrow in terms of Amazon's stock price. See, their net sales from 18.4 billion of Amazon Cloud Services, it jumped 16% to 21.35 billion, while their operating income, profitability, and net sales from 6.5 billion, it took a dip to $5.1 billion. So nonetheless, I'm quite happy with the results. They turned around. They generated profitability for their overall business. Okay, looking at their cash at $49 billion. Long-term debt, 67 billion. A lot of debt on this company because, you know, they grew hard. Like they spent all the money to buy all those planes and stuff to finance their overall expanding two-day delivery fulfillment
Mhm.
centers. So yeah, another good news from Facebook. Zuckerberg's fortune jumps $10 billion. It's his third biggest single day increase on record. So congrats to Mark Zuckerberg's performance. But looking at it, he's still the 12th richest man, according to Bloomberg Billionaire Index. But this is nothing compared to what he lost last year, when he lost 57% on his net worth, or a drop of $71 billion. So quite a long ways to recover still. But yeah, it's come around.
A good turn of events for Meta platforms.
Exactly. Yeah, I'm trying to like look at other information at this point in time, but I guess we're just gonna take a look at other reportings coming in the coming days, right, Maui? And
Yeah,
I think I saw some troubling findings in freight, logistics wise, UPS, Old Dominion, JB Hunt. I see some troubling numbers there, but I guess we're gonna take a look at that at some other time. But so far, yeah, it has been a good rally, right, Wabi?
yeah. So hopefully we get to see more of this, but the odds are against us.
Yes, sir. Well, we appreciate you guys tuning in today. Thank you, Wabi, for making it fresh from work.
From work, yes.
And
Fresh from paperwork.
fresh from documentation.
Mhm. Yeah, I had to leave work early because my shoulders are already getting tired sitting on the desk typing.
Yes,
I'll
sir.
catch up tomorrow.
Yeah, we gotta apply what we also preach to our patients: ergonomics and take rest breaks.
Mhm.
All right. Well, thank you once again for joining us. If you guys like this and support us, please hit the like and subscribe button. Again, this is Mark Hughes signing out.
And thank you, everyone. Like and subscribe.